Hello, and welcome back to the Financial Freedom Show. You might already notice something different right off the bat. I did get a new microphone just today, so hopefully this audio quality is pretty good. I look forward to creating videos for you guys in the future, so I decided it was best to invest in some audio equipment so that my videos can be better quality. So if you do enjoy these videos, please be sure to give a like and subscribe in order to stay up to date with the latest in my portfolio's changes. So if you look in my portfolio, you'll notice that the balance has gone up. This is because of a combination of two things. I did a new deposit from my paycheck of about $1,700, and then I also had a market gain of about $308 today. So what you're going to see is I actually bought back into the market in my Roth IRA account. My reasoning behind this is I don't really want to use that money to purchase my house in the future. So I decided that it's probably best for me to actually just continue to stay in the market and remain invested, because it's better to spend time in the market than try to time the market. So with that fund in my Roth IRA, I am not going to be selling out or anything like that. In fact, I'll probably be contributing more over the course of the next couple years. And I just don't anticipate using those funds as a down payment. So I'm only going to use my taxable account for that down payment. And that's kind of what I'm thinking for the future. I did reinvest back into VUG, which I'll talk about in a later video. Maybe the next video I'll actually go more in depth into VUG, what the fund is and what it does. But basically, right now I have my taxable account in SPAXX, and my Roth IRA is 100% in VUG. So what I did was I actually took the opportunity to reduce my average cost from what it was before by about $20 per share in VUG. So if you go to the positions tab, you'll actually see that my position in VUG here is actually $26,586, and it was originally $26,424, but this is just the day-to-day fluctuations. If it goes down over the course of the next couple of months, I really won't care. I'm just looking to invest in this fund for retirement, so I'll just continue to add on dips, and if it goes down more, I'm just going to buy more. Something that Warren Buffett always said is be fearful when others are greedy, and be greedy when others are fearful. And yesterday, everybody was pretty much fearful. The market dropped almost a little bit over 1% yesterday. All you see in the headlines are news about the market crashing, what to expect if the market crashes, and just a bunch of negative news articles that are out there. So I decided it's probably best to just remain invested and see where it goes, because the same thing kind of happened in early 2023, where everybody was talking about the market crashing, but it was really right after the market bottomed, and then we had that 20% rally this year. It's definitely better to remain invested over the course of the long term instead of trying to time the market, and especially when you have such a small portfolio like 26,000. I know that's a lot for some people, but overall in the grand scheme of things, it's not that much compared to a $1 million portfolio, where the fluctuations in that portfolio could be anywhere from like 50,000 to 100,000 a day. So I do fully believe that if you have a smaller portfolio, you shouldn't be worried about trying to time the market, because it's just going to make such a negligible difference. You may as well just stay invested for the course. Eventually, the market will go back up. It's just going to take some time. Could be a couple years. Who knows? Nobody knows what's going to happen in the market. Nobody is able to time the market correctly. So I'm just going to remain invested with that. The reason that I have my individual account in SPAXX is because I don't think I can time the market. So I don't believe I can time a market upswing in the 8 months that I need that money by. So I'm just going to remain invested in SPAXX so that I don't have to worry about market fluctuations. If the market crashes in the next couple months and we see that home values go down and I'm actually able to get a good deal on a house, I'll want to have that money available so that I can purchase. because if it was actually in a index fund and not invested in a money market fund, I would not be able to have as much money for a down payment. In fact, if the market crashes and the housing market follows, you're going to have more money available than if you were invested in the market, because the amount of money you have is probably going to remain about the same compared to what it is now. But if you are actually out of the market and the market falls, you're going to have more spending power available to be able to actually purchase that house. Something that I want to clear up from the previous episode is I'm not telling you to buy SPAXX. In fact, I don't want to tell you to buy anything. That's totally your decision. I'm just here to show you what I'm doing. And I just want to be open and transparent that this is only for entertainment purposes. I just want to show you what my journey is and what I'm seeing. And I don't want to give you bad advice. So I'm just showing you guys what I'm doing in my portfolio so that you can see what my journey is. So with that out of the way, let's take a look at the actual dividends that I'm going to receive in this account. So if we go to dividend view, you'll be able to see that my Roth IRA is getting about $161.22 in dividends each year, and that's on a yearly basis. So in 5 years, I'll have over $600 or $700 in that account just from dividends. The goal is over the long term to keep compounding this account. Because it's tax-free, I'm going to utilize the high growth rate of VUG, which is a growth fund, to continue to build my actual equity position. This fund is not focused on dividends, so the dividend return is actually really low compared to other funds, but it's focused on the actual growth of the asset. Because I'm so young, I believe that I should remain invested in VUG for the long term, but I do see the power of dividend investing, and I will be investing in dividends once I actually purchase a house. So I will be putting that in my taxable account, the dividends. That's going to be something that'll be coming down the road. But right now, this is my portfolio and this is my plan. Hopefully you guys are excited to come on the journey with me, and I look forward to showing you guys my portfolio over time. So right now we're actually going to look at my net worth statement. We're going to revisit this because we haven't been here in a while. Basically, you could see in August of this year, I earned up to $46,055 in total net worth. And that is a step above what the actual projection was previously. My projection for August of this year was actually to reach 46,000 even. But because I'm getting another paycheck in August, I should be able to get up to 46,000 and about 800 or so by the end of the month. So that's going to put me well above my target for my net worth going forward. And then the next month, I believe my income will actually go up quite a bit. Because of my bonus at work, I'll be paid a little bit more in September. My goal is to actually see if I can build about 4,000 in total in September onto my net worth. So if I could reach 50,000 by the end of September, I would be very happy. Going forward, that'll put me ahead of my target so that I can reach my $100,000 goal. Anytime along this path, I could purchase a house, but I'm thinking that by April of next year, I should be in the position to actually begin looking for a house, and then hopefully be able to purchase by the end of June. So that is my plan going forward. If you look at this graph, you'll be able to see that my overall net worth continues to increase over time. I am actually beginning to rebuild this back up. If you go to August of 2023, you'll be able to see that I am beginning to get closer to where I was previously as I paid off my wedding and several other expenses like student loans. So that's really exciting to see my net worth beginning to rebound. Hopefully I can reach 50,000 by the end of September. That is my goal. And I will continue to post videos and provide you guys with updates on the progress as it goes. If you scroll down to the other graph, you'll be able to see that it is the same thing. You'll see that this little increase here actually was a bit higher than expected. So Hopefully that'll boost my overall performance going forward. I haven't updated the graph for my outperformance yet. I will do that next month once we know how much I'm getting. I will boost my numbers based on that, and hopefully I'll be able to come up with a better, more accurate representation of what my net worth will be going forward if I continue on this track that I've planned out. So that's really exciting, and I hope you guys enjoy the ride with me. I'm looking forward to seeing you guys' comments below about what you think about my journey so far. Hopefully I can purchase a house by the end of next year. So those are my future plans, and I look forward to seeing what happens. Something that just came out in the news is the July inflation report, the CPI numbers. So the inflation remained moderate. It basically went up a little bit to 3.2%. And this kind of came in line with expectation. And this inflation report was actually good. So basically, the market has started to go up today based on this inflation report. We'll go into a little bit of detail about the report. Here is an article that was just posted a couple of minutes ago. Stocks are climbing, which is a sign that investors may be taking the inflation data to mean that the Fed is less likely to raise rates again this year. And about 45 minutes after the market opened, the S&P 500 was up over 1%, and the NASDAQ was actually up about 1.5%. So this is very interesting to see that inflation has begun to rebound slightly, but it is not a huge increase as was thought previously. So kind of a mixed signal. Could go either way next month. Inflation could go up quite a bit, or it could remain about the same, or maybe even go down. I mean, nobody can predict what's going to happen. So that's why I don't think we should time the market. Obviously, if inflation goes down a bunch next month, the market's going to rally. And if inflation goes back up, the market's going to crash. So that's basically what we're seeing with the inflation data. Nobody can predict what's going to happen with it. It could go either way, but we'll see what happens. It'll be really interesting to remain invested and just be along for the ride. So that is the conclusion of this video. If you all enjoyed, please be sure to give it a like and subscribe in order to stay up to date with the latest in my portfolio updates. And I hope you guys enjoyed the new microphone audio. I look forward to improving the quality of these videos over time. And hopefully I'll continue to be able to produce content on a regular basis now that I have more time and less things are going on in my life. So if you all enjoyed the video, please be sure to give a comment down below if you have any questions or concerns, any thoughts about my plan. And I look forward to seeing you guys next time. Thank you.